Hello traders, doing Trapper once again from TRFX, Swing Trading Mentoring. Now we're going to be taking a look at the interesting situation taking place on the pound US dollar, where as you would just have noticed, the market rallied sharply in favor of the pound as a result of the recent statements that were made coming out of the Bank of England. So essentially what took place was that the Bank of England basically provided the market with a strong, very positive outlook for the British economy, by saying that the outlook was such that inflation was expected to rise sharply toward 2%, which for a developed country like England is very high. And so that basically fueled expectations of positive economic growth over the next several months at least. And so this led to the strong demand, strong buying pressure that took place in favor of the pound just this morning. So before we take a look at the closer look at what took place, you will first of all have to appreciate the strong uptrend that the market has already been in for the pound US dollar since March of 2020. So the market has recovered strongly in favor of the pound with respect to the US dollar over the course of the last 12 months. And so what took place is that as part of this uptrend, the market created this outer uptrend line and this inner uptrend line. Now, zooming in, you can see that the market had been moving sideways over the last several days, which led to this wedge, which if you go down to the 4-hour chart, will actually be reflected as a pennant consolidation setup. So as you can see, the sideways pattern that took place over the last several days led to the formation of this consolidation pattern on the 4-hour chart, which is referred to as an ascending triangle or an ascending pennant, where we have the horizontal boundary of resistance complemented by a support boundary that is formed at an angle. So here you can see the recent rally that took place as a result of the recent statements coming out of the Bank of England. So essentially the market participants anticipated that the pound was going to be providing positive interest rate expectations over the next several months. And so the better move would be to buy the pound relative to the US dollar. So you can see the sharp rally that took place as a result of this trading decision. And essentially this basically reversed the bearish movement that took place over the last 12 hours, which was an attempt to start a breakout below this support boundary. Now, even in the absence of this statement from the Bank of England, the bullish pressure was a more likely scenario, given the fact that we're still in a strong uptrend. So even though we're broken below this inner uptrend line, the fact that we're still above this outer uptrend line, which is very strong, is basically putting the bias in favor of the pound. And so the better option, the better choice in terms of trading this currency pair would have been to look for bullish trading opportunities in anticipation of the resumption of this uptrend. So this rally was likely to take place at some point between this inner uptrend line and outer uptrend line. So it was really just a matter of waiting until the market provided a strong enough reason to indicate that it was now time to buy. So assuming that this rally is going to continue, and which as you can see here, if it continues to this area here, would essentially take us back inside of this consolidation and create a false consolidation breakout reversal. So if this rally continues and takes us back inside of the consolidation and then hits resistance before starting a breakout, then it will confirm the resumption of this overall uptrend in favor of the pound. Now, in terms of a trading opportunity and trading strategies to take advantage of this expected rally, well, what some traders would have been doing before this initial bearish breakout and this rally, traders would have been attempting to trade within this consolidation boundary by trading the movement between resistance and support. So this would have been a very aggressive trading strategy that you would have been able to take advantage of, that you would have been able to use and capture trading gains until the market broke out below the support boundary here. So assuming that the market is going to be continuing this rally, the next trading approach would be to look for trading opportunities bullish. and then trade them first towards this resistance area, and then wait for another signal to indicate that we're going to be starting a breakout bullish. So this will be the first target. We'd exit the trade here, and then we look for another confirmation that the market is going to continue bullish by breaking comfortably above the resistance boundary. Because what happens is that even though this is likely to continue bullish, the market has a tendency to sometimes pause and pull back at this area here before actually resuming the breakout. So if you don't want to be caught holding the trade for too long, then you can exit the trade and then comfortably re-enter the market when confirmation is given that the market is going to be resuming the movement above resistance. Now, some traders would have been attempting to trade this bearish as well. If you had entered the market here, then you would have been able to capture some trading gains. But trading against the trend is always a risky bet, especially since we have not really developed any significant bearish tendencies. So the market did break out below this area here, but as I said before, because the bullish tendency, because the predominant momentum of the market is bullish, trading against a trend like this would be a risky bet. So the better option is either to avoid trading the currency altogether, trade another currency, and then wait until they come back to this, only when we start to see bullish signals that are indicating that we're going to be seeing the market move in the direction of the current trend. So that's it in terms of this brief summary of what is taking place on the pound US dollar. Sharp rally over the last several hours in anticipation of bullish strength for the pound in reaction to the statements that came out of the Bank of England, basically saying that negative interest rates are unlikely to be the outlook for the economy, for the British economy over the next several months. So this is a positive impetus for the British economy. And so if interest rates are expected to rise, or at least not decline, then that is always positive for the currency that we're talking about. And so this created buying pressure in anticipation of continued bullish outlook for the pound over the next several months. So this took place within the context of this attempted bearish breakout from this pennant consolidation, which, as you can see, was short-lived, as the market is now attempting to resume the bullish movement in favor of the pound. Zooming out, you can see that this currency pair has been in a strong uptrend for quite some time, starting all the way back in March of 2020 last year. And so with this strong outer uptrend line still holding, the bullish momentum is still strongly in favor of the pound. And so the better option is to trade bullish opportunities that are in sync with this general direction of the market.